So out of that Spies case comes the Spies Evasion doctrine. Again, two factors required to establish Spies Evasion. Somebody failed to file a tax return, and then they took some affirmative action intended to conceal or mislead the government as to them having taxable income that was reportable in the first place. In Spies, the court stated that we think the affirmative willful attempt may be inferred from conduct such as 1. Keeping a double set of books. 2. Making false entries or alterations in those books. 3. Having false invoices or documents to support a cooked set of books. 4. Destruction of books or records. 5. Concealment of assets or covering up sources of income. 6. Handling one's affairs in a manner that avoids making the records usual in these types of transaction of the kind. And 7. Any conduct, the likely effect of which would be to mislead or conceal. Number 7 is really the support for all of the later identified badges of fraud. Remember that lengthy list I went through with you at the beginning of this video about badges of fraud? That's where they come from. Because any action the government can point to that says the likely effect of that action was to mislead or conceal will support a badge of fraud. An affirmative act of evasion may be any number of things, including but not limited to making a false statement to the IRS, either oral or in writing. Importantly, the statement could be made before, after, or at the same time as filing the tax return. Thus, for example, a taxpayer makes an affirmative act of evasion after failing to file his income tax returns when he lies to the IRS about how much income he earned in a subsequent audit over the returns missing. Accordingly, a taxpayer's lying about earnings could also earn in jail time and heavy penalties. Don't do it.